Few things are as important to the global economy as energy, and the price of oil affects almost everything you and I do. This year has been a relatively good one for oil producers as prices climbed, but it's also seen renewable energy sources achieve new milestones, and that could spell trouble for fossil fuels in the years ahead. After crude crashed by about 75% from its highs of 2013, the OPEC oil producers cartel agreed to output cuts in late 2016. Those cuts and rising demand from rapidly growing economies like China and India have driven crude prices up by around 16% in 2017. But China is also spending more on renewable energy research than any other country. And for 1 week in June, Qinghai province sourced all of its power from green energy. India's economic growth may be rapid, but choking smog is forcing it to shut down many coal-fired power plants and turn increasingly towards solar power. It says solar power is now cheaper than coal. And even as the US turns its back on climate protection, some places there are doing the opposite. In May, for example, California's largest power grid received a record 80% of its energy from renewables, including hydropower. One country that has embraced the new normal in oil prices is the world's biggest crude exporter, Saudi Arabia. With the promotion of Mohammed bin Salman to Crown Prince in June, the kingdom wasted no time in shaking things up in order to adapt. As Laila Humairah reports, he's leading a cultural and economic shift to wean the kingdom off its dependence on oil.
Saudi Arabia has been looking for alternative money-making industries, including the silver screen. Cinemas are making a comeback in the kingdom after more than 35 years of slumber. And theatres are expected to open their doors again in March. The decision opens up a huge prospect for the movie industry to be a catalyst for economic growth. The country expects to open more than 300 cinemas by 2030. This could contribute $24 billion to the economy. And regional movie chains are gearing up to jump at the large, untapped market.
Saudi Arabia is a great market, 32 million people, young people, most of them are below, the age of 18. So this is a great opportunity for Vox Cinema to expand in that market.
Crown Prince Mohammed bin Salman was a driving force behind the historic decision to allow women to drive and attend sports events. He also wants to lift the participation of women in the workforce from 22% to 30% by 2030. The prince is also overseeing an anti-corruption campaign, which has seen hundreds of princes and royal aides arrested. As part of its Vision 2030 plans, Saudi Arabia is looking to raise as much as $300 billion through privatization programs involving 16 sectors. A third of that figure is expected to come from the listing of state oil company Saudi Aramco. The sale of about 5% of the company is planned for next year and is designed to improve state finances. With over 90% of its income dependent on oil exports, the drop in crude prices has led to a widening gap between government spending and revenues. This has forced the country to cut its state budget. Diversifying its economy is seen as the main solution to reduce oil dependence. In October, bin Salman unveiled a $500 billion plan to create a business and industrial zone that will extend through its borders with Jordan and Egypt. The 26,500 square kilometer zone, known as NEOM, will include non-oil industries like biotechnology, digital sciences, and advanced manufacturing.
This project is not a place for any conventional investor. This is a place for dreamers who want to do something in the world.
For Saudi Arabia, the seeds of social and economic reform have been sown to make that dream come true. Laila Humairah, TRT World.
And many people are looking beyond oil altogether. A group of 30 scientists predicts that by 2050, 139 countries could be powered entirely by wind, solar and hydroelectric power. So to help us peer into the future is Ellen Wald. She's an energy expert, non-resident scholar at the Arabia Foundation and author of the upcoming book, Saudi Inc. And she joins us from Jacksonville in Florida. Welcome, as always, Ellen. Great to see you. Let's look into 2018 and beyond. How much of a threat are renewables to the revenue streams of oil producers like Saudi Arabia?
I think that renewables are not really a threat to the revenue streams of these major oil producers, but they are certainly growing in capacity. And I do think that these nations that do export a lot of crude oil will be looking to diversify their revenue streams in terms more of looking to create value in petrochemicals and refining, as opposed to just the blanket export of crude as renewables gain in market share.
So I have to ask you this, Ellen, where do you see oil prices going in 2018? We've had these output cuts from OPEC and other oil producers this year. Demand is growing strongly in many parts of the world. Where is it going to lead prices?
Well, I'm always hesitant to put a number on oil prices because most predictions tend to be wrong, but I do see a lot of continued volatility. We reached a major milestone earlier this week when the price of WTI hit $60 a barrel briefly. But I think that is, we're not necessarily going to see a huge gain beyond that. I think oil prices will remain volatile. We're really in this range due to a confluence of temporary forces. So I do think we will see some, ups and downs over the next year, definitely in the $50 range.
Do you think, though, that the shale producers in the US could spoil this party for the big boys? The rig counts have gone up quite a bit over 2017. They've kind of stabilized in recent weeks, though.
This is the big question, is just how much is shale going to come roaring back as the oil prices get higher? And there are a bunch of factors to look at when we consider this. One is service cost for shale oil producers. Many shale oil producers can produce oil at lower cost than they used to, but as the price of oil rises, so do some of their own costs. And that's going to eat into their profits and therefore eat into their ability to continue to grow at such high rates. So I think that we will definitely see continued growth in shale oil, particularly as the United States exports more oil, but I'm not sure that we're going to see it to quite the extent that we did in years past.
Let's go back to Saudi Arabia for a second. When it says that it wants to wean itself off oil, is it mostly talking about how it generates power domestically for domestic consumption, or is it also talking about how it changes its main source of income?
So it's definitely twofold. Weaning itself off of power generation from crude oil is a huge component of what Saudi Arabia is looking to do. It's really inefficient to burn crude oil for power. They are really looking to switch over to natural gas. In particular, they're even looking abroad for sources of natural gas, which is a really interesting new development. But one of the other important things that they're doing is when they say they want to diversify away from crude oil, that doesn't mean they're looking to get out of the energy industry wholesale. What they mean is they don't want their budget to be so dependent on the price of crude at any given point. And part of that means bringing in more money from other energy sources. So, for example, they're bringing in a lot more from petrochemicals and manufacturing of items based on these petrochemical products and from refining as well.
Saudi Aramco, the big IPO coming up. There have been doubts about the valuation of Saudi Aramco. The kingdom says it could be valued at up to $2 trillion, which would make it the biggest company on earth by far. Independent analysts say that it could be a lot less. What's the latest thinking about where the Aramco valuation is going to end up?
So one of the things is that we really won't know until they, have their prospectus and they start to, have their events in terms of the IPO. But it's dependent partially on the extent of Saudi Arabia's reserves and how the banks involved value those reserves and Saudi Arabia's capacity. But one of the things that Saudi Aramco also has is they have incredible downstream resources, and we need to see how those are going to be valued, because Saudi Aramco is more like an international oil company than it is a national oil company, and it has a growing downstream sector. And so I think we're going to need to see how the banks evaluate that sector. Also, Aramco's R&D sector is growing by leaps and bounds. So we're going to need to see how that gets factored into the total valuation before we can really see if they hit that $2 trillion mark.
Lots more to talk about in 2018 when it comes to energy. But for now, Ellen Wald, energy expert, thank you ever so much.